Hey guys, how are you? Vladimir here, and this is the Forex Triple B weekly review for 14th to the 18th of October. As you remember, a few weeks ago we started a new format of the videos where we are reviewing our performance using the trading systems, and this video is about the Forex Triple B performance of the previous week results. So what we will be doing is going over the trades we took, explain the reasons for that and the logic behind our technical analysis. What are the factors we take into consideration when we decide are we trading it or not. The logic we work with always is very simple. We analyze the market in advance, we choose the directions we want to trade, and if we get the setups in the directions we trade, the alerts and the signals from the systems, what we do is we simply valuing the risk reward ratios, making sure there is a room to go, and we trade it. As simple as that. So you can always go back to the blog and check the images that are uploaded for you, so you can see the entries and the exits of the trades we take, and of course the trend reasons. So what do we have? The week started slower right here. Dollar yen was great, then we had a couple of losses which improved later on the go. So the first one is the dollar versus the yen. The idea there is a bullish trend. Let's quickly analyze the market to see what were the conditions we were dealing with. Daily was building up the double cycle, and the beginning of the week was right there. So what we wanted to see is a trend continuation. The 4-hour chart had nothing against us at that point, so we wanted to see drops and continuation until we would get some signs against. And that's what we traded. We also got the trending structure, then dip 2 waves to the downside. Beautiful trend came in, beautiful signal came here in place. No opposite divergence, as we can see. Free to go, trend riding on the Bollingers, and that was the trade here. The idea was to buy, and we got paid. Next one was the New Zealand franc, where we simply suffered a loss. The idea there was bullish. We also had a great trend structure in play. Then 2 classical waves inside. The view was bullish as it was holding this bottom. The trend from the 4-hour chart was bullish. Unfortunately, in that case, after everything looked simply beautiful, it ended up with a loss. Part of the statistics, we can't change the market. We can just keep working clean, respecting the rules, and trading based on them. New Zealandian yen was also a wonderful opportunity in the view of a trending structure. Now the pace of the retrace here was suspicious. As you can see, the second leg was increasing momentum, but analyzing the higher time frame, the view was bullish. In that case, unfortunately, didn't work out, and we suffered a loss. The 1-hour chart, the next pair was the pound franc, where we got a classical confirmations from 1 hour and higher, and this is the idea of the pound franc. Basically, all the pounds we enjoyed definitely a great help from the fundamental view and from the bullish sentiment that the pound pairs offer to us. So what did we have? Pound franc, here we go. So from the daily chart, it was obvious that we are developing here a second leg after the break of this high. There were no signs against us, no bearish divergence, no trend lines. The next critical resistance was only higher, so it was a beautiful opportunity to enjoy from. The 4-hour chart also had one shot to the upside retrace and nothing against in terms of ending divergence. So the idea was very easy, looking for the buy setups, and I mentioned before that the 1-hour chart supported as well. So it delivered here a bullish structure for us of higher highs, higher lows, and a bullish hidden divergence. and that was a great combination to enjoy from, and we did. The entry had no doubts, and this pair, the pounds, when they move, they deliver. Australian versus the franc, also what was a simply classical bullish structure in terms of the higher highs, higher lows, two waves correction. It looks simply good, as simple it can be. The higher time frame supported us the bullish view. After breaking this falling trend line, here. And the idea was we are gaining momentum, higher highs, higher lows by retraces. Unfortunately, in that case, the market decided to dive to deeper correction before the next movement started. Part of the game, once, as I said before, we cannot change the market. We can just follow the rules and respect the analysis, just keep working clean, and the numbers would follow accordingly. Losses are part of the game. Pound dollar is exactly the same like the pound franc, so I'm not going to waste the time here. Same setup exactly. Euro versus the Kiwi was our next one, and this one was one of the favorites. The reason there, we broke out of the bullish triangle previous week, right here, right? And the idea was we expect the continuation to the upside. The lower time frame delivered a beautiful bullish structure supporting the assumption we are going to the upside, two waves correction. The trend line was bullish, the trend analysis is bullish, and the buy was very easy here and delivered. Next one on the list was the pound franc, again with a deeper correction that came afterwards. During the week, the analysis did not change, the buys remained in place, and the expectations from further continuation was still, of course, there. The structure, the analysis, everything led us to the same conclusion and decision. And the pounds, when they move, they deliver. Euro versus the pound, also classical setup, not just the trending structure that the market suggested to us, but the beautiful two waves retrace, which led it. Take a look here quickly. Euro, pound. That's what we were facing during the week. The expectations of the two waves continuation downwards. As I explained in a previous weekly forecast, 4-hour chart at that point had nothing against. So sell retraces would be our plan, and moreover the 1-hour chart before delivered the classical bearish hidden divergence for trend continuation, and then a new structure, as you can see, lower highs, lower lows, and a new bearish hidden divergence that we simply enjoy from. So the logic here stays as it is. No signs against, trend continuation expected. That's the sell we got here, and again delivered. Pound dollar, like the pound franc, so I'm not going to waste the time explaining that. Pound kiwi was a beautiful opportunity. Again, nothing was standing against us. The only concern we started to see is the slowdown of the divergence, but in such cases, in the majority of times, we first of all face another push and false breakouts. In that case, it didn't happen, and we suffered a loss here, even though the short-term target was reached. But because of the longer-term analysis, we decided we are going for bigger targets. In that case, unfortunately, it didn't deliver and lost. Gold, as you might remember from my weekly forecast analysis, we are in a bearish channel, so my expectations were looking for the sells, and once we got the bearish divergence here and the lower lows verify the momentum, sell the rallies would be the plan, as simple as that. And the opportunity was delivered right with the two waves here and here, both short term. The slope was holding small but bearish. The analysis from the higher time frame is bearish, and we wanted to look for sells, and in that case it paid. And the last one was the pound dollar again, but you already know the analysis, so not going to repeat that and waste your time. So that was the previous week. Yes, in that case the fundamental helped us a lot, and of course the sentiment that turned to be bullish, and it's part of the game. As I always say, we cannot affect the market, we cannot predict the moves. What we have to do and respect from the market is always follow the rules, the exact rules as they are, and from that let the market do its work. A week before the previous week, 2 weeks ago, we had not a good week with a triple B. You can of course check out the previous week review and you would see that, right? But this week, well, previous week, we enjoyed from the clearer trends, clearer setups, and despite several losses, the other pairs that moved delivered. And this is what I want you to remember always. Trading is a business of statistics and probabilities. Make sure you respect the rules and your analysis. Make sure you respect the numbers and let the market do the work for you. That's all. Don't force and don't think you can do better than the market. Be part of it. Don't try to be smarter of it. Then that's the weekly, and I would like to thank you for your time watching this video. I hope you find it helpful, educational and useful, and for all those of you who have the Triple B, I'm there for you in our Triple B Telegram channel. You can ask all the questions you would like, as always. Of course, those of you who don't have the Triple B but want to join our family and our Telegram channel, just follow the link below the video in the description. Get your copy. One of the options is to get it completely free with the broker's program. All the information you can find below the video in the description. And if you have any questions, we are here for you. Just contact my support team and we will be more than happy to answer all of your questions. Thank you very much for watching this video. I wish you a fantastic trading week, and I'll see you around on the other videos during the week. Ciao for now, yours, Vladimir Ribakov.